talked about the cross-border travel. That was a huge gainer for you. Can you give me an idea of where the pockets of strengths are coming up and where the weaknesses still are?
Sure, Alex, and thanks for having me. Yes, the cross-border business, as you know, has been in recovery ever since borders started opening. And we've seen quite a bit of recovery so far, but there's more to come. It's been very strong in Europe, in and out. Our Europe cross-border business is well above 2019 levels. Latin America has been strong for a very long time. It stayed open through most of the pandemic, and it was a favored destination because it was open with few restrictions. The Middle East and Africa benefit from the FIFA World Cup, and in general has also stayed fairly open. Where we've had things still recovering is obviously Asia. Asia was late to open. Our Asian business is still below 2019 levels, both in and out. Most of Asia is now open, except China. Japan just opened. It was up almost 50 points soon after opening. And China is just beginning to open. The other area that is not quite back to 2019 levels is inbound travel to the US. And that, we think, is because the dollar was quite strong. As the dollar has weakened a bit, we've seen that pick up. So the room for recovery left in the business, and there is still recovery left, is in Asia, in and out, into the US, and we await the travel from China. China has opened, but it's going to take some time before the travel picks up. Airline capacity has to be built up. Ticket prices, visas, and so on. So all in all, some more to come, but a lot has already happened.
Vasant, as you highlighted, good morning, it's Guy. As you highlighted, a lot of the pickup you've seen in Europe has been driven by Americans using that strong dollar to travel and enjoy European attractions. As that reverses, is this a zero-sum game? As the dollar loses ground and Europeans start to go over to the United States, do you lose out the commensurate, the same amount of Americans going to Europe? Does one cancel the other out?
Well, we think there's a ton of pent-up demand, and you've probably heard that from the airlines. In fact, there's more demand than there's airline capacity in some cases on some of these routes. And yes, Europe has been a big beneficiary, not just from US travel, but we've seen travel from other parts of the world go to Europe, perhaps because the US was also, expensive. Yes, there will be some shifts, but we think the demand is so high and there's so much pent-up demand from many years of people postponing travel that, at least for the foreseeable future, we don't think it's a zero-sum game. We are anticipating the cross-border business continuing to recover through this year. It's still got some room to recover before it gets back to what you might call the pre-COVID trend line.
Yeah.
So we do think there's room for all of it.
So, Vasant, to that point, we're getting a lot of layoffs in different sectors. It was tech, banks, now industrials, now we got Hasbro today, et cetera. And I know this is a US-focused question, but do you still feel that pent-up demand can continue if we keep getting layoffs, if the hard data that starts to roll over? What's your visibility?
Well, we've been very clear that we are not economic forecasters. We've stayed out of the economic forecasting business. We'll leave that to the economists. And nor is our business a leading indicator, because we see spending as it happens. I don't know if you don't feel good about the future and will not spend something 2 weeks from now. I only know when you do it. So I want to be careful to say the consumer has been very resilient all year. In the US, consumer spending is up 45-46% over 2019, which is a pre-COVID trend line. And that's been true the entire year in 2022. And it hasn't changed yet. That's what we can speak to. As to what might happen, we'll leave that to others. We can tell you that the consumer remains remarkably stable in their spending at this point.
Yep. You're in San Francisco. As Alex says, tech is laying people off. What about you guys? Do you feel any need at this point in time to protect the middle of the P&L, to protect the margin story? Are you confident that you have the right setup right now? Is there the opportunity to hire more as others lay off? How are you thinking about your staffing needs?
Well, we've been very disciplined, I'd like to say, through the pandemic. We didn't get carried away. We've had a steady increase in investment in our business. Ours is a long cycle business. You have to invest today if you want revenues in the future. we didn't go overboard. We didn't overhire. Hopefully, our headcount is up, our investments are up, but not, and we've started to moderate that. I don't expect us to cut back in terms of having layoffs. We'll wait and see what the recession is like, if there is one. What we might do is moderate the level of spending, which we're already doing. And we've also planned some changes we would make in the level of investment in our business. We will continue to invest, but we might moderate it. We might postpone some things. We might decide to deprioritize some things. I doubt we would have any layoffs. What we might do is, moderate the rate of increase.
Okay, so you have some levers on that to pull. At the same time, U.S. banks are trying to really increase their exposure to Zelle's parent company. Talk to me about how you retain market share in that environment. Are you worried you're going to be losing some customers there?
Well, we'll keep doing what we've always done, which is deliver the most frictionless experience when it comes to paying digitally, make it very secure, very reliable, offer a variety of services around it where you can get your money back, make the security and fraud levels as low as we can make them. And as long as we can do that, we think we become the preferred method that people use. We have a brand people trust. We've been around a very long time. People have come to believe that we never let them down, whether it's reliability or security or fraud or dispute resolution. And that's how you win this game. You win it on the merits, you win it on the capabilities you offer, you win it on being a superior service.